Hi, this is Bert Dohmen Monday, June 15th. Today was an interesting day in the markets. Fears from Europe over the weekend were that Greece would not be able to find a solution to its problems with the EU, and that it would probably lead to a default and a Greek exit from the EU. We are slightly more optimistic. We think that about 1 minute to midnight they will reach an agreement. It is in no one's interest to have this turmoil that would be produced by a Greek exit, and the bureaucrats running the EU have absolutely no incentive for that. They would much rather go home to their families and say, hey, we avoided a default, and everything is wonderful, because the money that they're spending or the money that they're losing with Greece is not their money. It's only that of the taxpayers. So let's look at this chart of the S&P 500 index. This goes back to about the summer of last year. Here we can see September 19th, which was a very important day. September 19th, that was the day of the Alibaba IPO. I had said on national TV on CNBC that in April that would be the day to sell stocks, because you'd have a substantial decline in the market afterwards, and we did have that. This was very, very sharp. And down here is where the PPT, that's the Federal Reserve with the US Treasury, together they intervene in the market and they boosted it up. We got a buy signal right here because of these beautiful candlestick charts. You can see that these are called hammers, and we got the big up move here. So we participated in that as well in our trading services, Smart Trader and the Fearless ETF Trader. So the market has been going up here. It's had a series of oscillations, and you can connect the bottoms here and you get a rising diagonal line. You connect the tops and you get a straight line, and together they form a wedge. A wedge is a dangerous formation, and especially when you have an upside breakout here. This is in May. The S&P 500 actually went to a new record high. This is when the GDP was actually came out negative, negative growth. If you have two consecutive quarters with negative growth, it's called a recession. And here we see the stock market going to new record highs, while the economy is going into perhaps a recession or something similar. So that's a disconnect, and usually the market wants to go down in order to get back in phase with the economy. We can see here that the market did decline. Then it found support at the 150-day moving average. That's this line here. 150-day is what we use. Most analysts use a 200-day. We find 150 days is much more useful. You can see here it touched, rallied, and where to find resistance? It found resistance right at the diagonal line going upward. So this is called a throwback rally. It's very normal, and it's usually followed by a much stronger decline. We saw in the last 2 days probably the first part of that. Once again, today the index found support at that line, but once it is broken, you're going to see a lot of selling. Okay, so this is what I see for the markets right now. Thank you for being with us today, and join me again. This is Bert Dohmen signing off.